Hey guys, welcome back to the channel. Matt with Green Bar Trading here. This is a weekly watch list video where I'm going to go over everything you need to know for the week ahead in the stock market. You can see up here, these are the earnings for the coming week. Monday, there's nothing showing because the stock market is closed for the Labor Day holiday. All right, so here you go. You have your earnings right up there. Like I tell you every weekly watch list video, if you're going to trade these stocks, watch that IV crush. All right. If you're trading options, if you don't get that big move in your favor, you're not going to do well with those option contracts. Sometimes it's better to trade shares because you don't have that to worry about when earnings are coming out. All right. So that's just something to keep in mind. All right. So up on the screen now is your economic calendar for the coming week. Like I said, on Monday, Labor Day holiday, the market is closed. And the big thing for this coming week is the jobs report on Friday. That is your big report for the week. That's what everyone is going to be looking at. The Fed, the traders. This is going to really set up to figure out where Powell and the FOMC is going to make those rate decisions. Are they going to go a quarter point? Are they going to go a half of a point? It all depends now on the jobs report. This has been hyper fixated now after the last report and what Powell had said at Jackson Hole about the unemployment rate, about the jobs, and he was seeing some cracks in the labor market, which suggested that they're definitely going to be cutting rates. Just how much are they going to cut? So that's just something to keep an eye on. The jobs report now is going to become the most important stuff to watch. Inflation has been coming down. Those reports have been good. The PCE on Friday was fine. So that's all intact. Now it's the jobs. Did they not cut soon enough? That's what everybody's going to be wondering. If the unemployment rate keeps going up, it's something that people are going to look back on and say, you know, if we would have lowered rates earlier, maybe it would have saved some of these jobs because, you know, at the end of the day, working, having a job, getting paid is the most important thing for the economy. If you see job losses start to spike up, it's going to be very bad for the economy. And it's not even going to matter that they're now going to be lowering rates because what has happened is already in motion. So that's just something to keep an eye on right there. Friday is the jobs report. Now, going over to your sectors, on the week, financials, industrials, utilities, healthcare, these were all very good. The banks did very good this past week, as well as the past month have done very good, along with everything else, basically. There's been a very nice rally after the pullback we saw. There's been a very nice rally now to where the markets are sitting right at those all-time highs, except for the tech QQQ, the NASDAQ, that hasn't gotten up to their previous highs yet. They're lagging the market. We're going to go over that in a second when we go look at the charts. So this is what we're looking at. 1 year performance, technology, still the top gainer here, followed by financials, all right? Energy, which was great a couple of years ago, has been the laggard there. So that's the year performance. You guys can look at this. This is on FinViz. All you do is you go there, click on groups, and you can see what's really hot and what has been slacking lately. 1 week performance, technology down just about 1%, while you have the defensives up. All right, so that is your sectors and their relative performance to each other. All right, going into the charts, we always start with the SPY. This is the S&P 500 ETF. This is what I call our compass, showing direction for the potential move for the overall market. This is what I really like to look at. All right, so you can see here, we're clearly consolidating. So after a nice move right here, right? So we pull back, normal. This is a normal little correction here, and then rallied really quickly. And now the consolidation before that next move up. Now, to me, the charts are suggesting that we're definitely going to be breaking out to all-time highs. You had here on Friday, big volume, right? That's a great sign. The RSI is looking very good. And then you have here, you have this breakout happening here. The highest close here since July. And we're looking really, really good after the consolidation to have a breakout. Now, again, the market is closed on Monday. Let's see what happens on Tuesday when the market opens. We could be in for that breakout for the SPY and then all the way through the election and see what happens towards year end. But this is really good. So this is what you want to see. After a big move, you want to see that consolidation and then on heavier volume this day right here on Friday. That's a good sign. It's a good sign. Everything is suggesting by looking at the technicals that we're due here for now a breakout to that next level, wherever we're going to go. So that's on the SPY. Going over to the QQQ, again, like I said, this has been lagging the rest of the market. We're not back to those all-time highs yet. What we are doing is a nice bullish hammer candle here on Friday. Right here, over the 50-day moving average. So, you know, it's flirting with this moving average here. You can see here, it's had some trouble. Now we're over it. Could this be now that next move higher? We'll have to wait and see, but that's also looking good. The RSI is looking good. Volume is not looking good. So this is something that I always look at. We like to see on nice moves like this, bigger volume than those red days, which we don't see here on Friday. Now it is a Friday before Labor Day, but we saw on the S&P 500, we saw some bigger volume. So we'll see what happens. This is still in that little bit of a consolidation period after that nice bounce. So that's where we're at right now on the NASDAQ. The VIX is also looking good. If we look at this on the daily chart, we saw that spike, and then we came right back down, and now we're back where we started. So the VIX looks good for a breakout. The charts look good for a breakout. We'll have to just wait and see. Like I said, Monday, the market is closed. We'll have to wait and see what Tuesday holds. Quick video here. Hope you guys enjoyed it. If you have any questions, leave it down below. Thanks for watching. Don't forget to hit the thumbs up for the video. Take care, guys.